Hi, everybody. This is Jeff Kalafut from Pinnacle Partners Group, brokered by eXp Realty. Welcome to another Market Talk. Today, we are joined by my business partner, Jason Frank. We're joined by Joseph Ponabianco of Annie Mac Home Mortgage. He's the Chief Executive Officer there. We're joined by Matthew Johnston, Esquire, from the law offices of Matthew Johnston, and Kevin Dolan of Annie Mac Home Mortgage. Welcome, gentlemen. Thanks for being here.
Thank you for having us.
So market talk, it's kind of self-explanatory. We want to talk about what's going on in our industry. There's some changes that are happening. Joe, we're going to kind of start off with you first. What are you seeing in the mortgage end of things? What can you predict for this upcoming year? Has the election had any impact on what we're going to see? There's a lot of questions people have.
Yeah, for good reason, because there's a lot out there, right? So first off, I'll do the easy part, and that's sort of housing. So, depending on which pod you listen to, it's a safe bet. And I'm just going to talk about 2025 for now. We can get into any questions we want, but it's a safe bet that inventory is going to remain relatively tight. Obviously, everything is local, but inventory will stay tight, which means that we expect home price appreciation to continue, certainly in the areas that we're talking about today. We shouldn't see any exorbitant shocks in terms of 10 and 20% increase in value, but it stands to reason that it will at least increase with inflation, and maybe a little bit more, so anywhere from 3 to 5%. In terms of inventory and demand, we've seen pretty clear evidence all throughout 2024 that when rates get sort of above 7.5%, demand slows down. When rates get below 6.5%, demand picks up pretty quickly. That's a very safe range for us, at least in the short term. Obviously, we're all hoping for lower rates. But at the end of the day, there's only so long that you can hold demand down. And demand is starting to increase again. If you look at the industry, depending on who you look at, whether it be the MBA, Fannie Mae, Freddie Mac, or some of the economists out there, they expect an increase in overall originations of about 10 to 20%. Now, I say that with a smile, because economists have been wrong and really wrong for the last 3 or 4 years. But having said that, it does sort of line up with reality. And now I want to focus on rates for a little bit. So, yeah, there's definitely been a paradigm shift. And I want to preface this by saying that it seems in our world today, you can't have a discussion without it becoming politicized. So anything I say is not a political thing. I'm just stating facts, right? So a change from the Biden administration to the Trump administration, I'd say, is both good and bad. And we're going to find out probably. So we have another 60-odd days until inauguration, and then we have 100 days for the president, any president, to make his stamp on the economy. So what happens? There's going to be a flurry of activity. So what are some of the things that the market, the bond market and the mortgage market has been pricing in lately? Well, unfortunately, the bond market has been pricing in, with lower taxes and no offset in order to raise revenue. It's potentially deficit increasing, right? So imagine you have a store and we say to you, listen, we're going to cut the prices by 20%, but we don't know if sales are going to pick up. That's the bet they're sort of making, whether you agree with it or not, right? Tariffs are another thing that's been a hot button. One thing I will tell you about President-elect Trump is he does what he says he's going to do. So tariffs are expected to be a thing. Most economists feel that it's inflationary, and whether it's inflationary or not, the market has priced that in. So for those who follow the poly market, that's the betting market for the election, you could almost go tick for tick with President Trump's potential election win with the Treasury yields. Now, having said that, you can look at the other side of that, right? We have less regulation is certainly going to be a tailwind, not just for our industry, for the real estate industry, but for industries in general. We talked about stable home prices. That's certainly going to continue to be a thing with a stronger economy. You would be hard pressed to find any asset class, houses, stocks, gold, corporate earnings, crypto, that is not at an all-time high. And with higher asset prices comes more confidence, comes people's willingness to invest and grow. So as one part of this talk, we're talking about things that are going to slow the economy potentially in terms of higher interest rates. The other side is it's a very pro-growth environment, and asset prices are reflecting that. So the only thing that's really left behind is the bond market. That's why I say the next 160 days are going to be very important, because post-inauguration, we're going to see that look. Now, having said that, our expectation is that until March, we're probably going to have a modest season. We all know that the beginning of the year is a slow period. There's not a lot of folks buying houses between Christmas and New Year's and after New Year's, but we do expect a robust spring buying season. By that time we will know the status of Fannie and Freddie, whether they're being released from conservatorship or not. That's probably a 2-year process. We'll know very specifically what the new president's not only looking to do quickly, but will have the ability to do quickly, given that both the House and the Senate are highly skewed to the red, we'll say. So, but we tend to look at this market not as a quarter by quarter, as a longer term view. We are blessed with a very strong economy. We are blessed with a very strong housing market. If you want a job in the United States, you can get a job. Now, you may not like the job you can get, but there's a job out there for people working. So, our belief is that whether it be a quarter or 2 quarters or 3 quarters, U.S. economy, the real estate market and the mortgage market are where you want to be over the next market cycle. And that's how we set up our business from there. So having said that, I'd love to take any questions on anything that I was referring to, and I'm happy to answer, whatever I'm able to.
Joe, what do you think the mortgage rate would have to be to start to stimulate the people that are sitting on a 2 to a 3% rate or 3.5% rate, that the current rate would have to drop for them to release and go, okay, now it's time for us to go buy and move somewhere else?
Yeah. So luckily that work's already been done by the Federal Reserve of San Francisco. And they said that it's about 180 basis points higher than the prevailing rate, right? That's already exists out there. So basically, without getting too technical, that rate is about 5.5%. At about 5.5%, the person sitting in a sub 4% mortgage is ready to buy. Now I'm going to caveat that by saying that and I'm going to do a sort of a cheap plug here. But one of the reasons why we have our buy now, sell later platform is because inventory is so tight that there are some people who would move but are afraid of being homeless for some period of time until they find a home, right? So, and there are also people who are high on credit card debt. We know that's very high with some segments. Everyone loses jobs every day. People are getting divorced every day. Unfortunately, people pass away every day. So there's that natural migration of homes. But if you're asking the generic question of this massive people, what's the rate they need? The economists will tell you 5.5%. However, if you looked at just September, I don't know if you guys saw a large spike.
Oh yeah,
it was 6.5%. So my belief is it's really about 6%. If you really want to get the industry moving again, it's about 6%. 5.5% will get us to where we were sort of at the end of 21, which is very busy, but not the historical craziness we saw during the peak of COVID.
Yeah, because I definitely think it's a combination of rates and also cost of building material in the United States. In the pocket that we're in the Northeast, obviously land is scarce. So new builds in our pocket aren't going to be, as influx in the inventory to really change that needle. It's most likely going to be rates that are really going to change our needle to increase inventory.
No question. I mean, I wish we could snap a finger and get housing built, but housing really takes place on a municipal level. I mean, has anyone ever gone to a town hall meeting and listened to the pushback from these people when you try to right now, imagine trying to build 1,000 homes, right? It's problematic at best. But I also don't want to dismiss the possibility that there are homes out there, 2 or 3K homes that need work, that you can get into now at a relative discount to the better priced homes and do a rebuild, because there's certainly, for those who have the appetite for that's a place. But in our region, the region you're referring to, they're not building any more land. So, it's still going to remain tight through 2025 for sure.
Yeah. Even Toll Brothers used to go after underperforming golf courses to build the large communities. But now that golf has even picked up, now all these golf courses are doing great. So they don't even have that opportunity for underperforming golf courses to go after that land. So yeah, it's our pocket is definitely going to be tough for sure.
And if you look at delinquencies are still low. And what most people miss is that if delinquencies pick up, you're not going to see them actually go to foreclosure, because the value that most people have in their home is so extreme that they'll sell, and builders won't be able to get homes on the cheap.
Yep.
Yeah, the
I
amount
mean,
of
just
equity that people are sitting on right now is crazy.
Staggering. So
Yeah.
that's another thing that's at an all-time high.
Right.
yep. I mean, so just for instance, one example, Long Valley, Jeff and I were running numbers. Our appreciation rate for this year is 12%. That's crazy.
Yeah,
Wow.
shock.
Yeah.
It's crazy.
Yeah, just some stats too, of just with to chime in on Joe's point of like that 6%, sort of the middle of where we are kind of today versus what the economists think that 5.5% rate moves home sellers. Pretty much Fannie Mae, mortgage, the NBA, National Association of Home Builders, and NAR all pretty much put to 2025 to have a rate by the end of the year of somewhere between 5.7 and 5.9. So from an optimistic standpoint, I think we're heading in that right direction next year, that we can start this inventory open up a little bit if those numbers serve to be true.
Yeah.
Yeah, I agree with that. I think we've actually seen a little uptick of inventory, even for November, right? We're in mid-November 2024, and we saw a slight uptick in inventory in Long Valley from last month, which is very unusual to see any increase this time of year. So, people out there still buying and selling, and it's still happening. And I think that we like Joe was saying too, we get down into those, into like the 6 range. I think that we're going to be pretty happy out here. I think it's going to open things up a lot. 5.5 would be even better.
It would be
Yeah.
one. I don't even know that we need 5.5, but 6, close to the
6
6.
is great. Yeah.
The normal. So when you look at the historical trends, they're getting skewed a little bit because there's so much pent-up demand. So much pent-up demand in the background that's why it's going to be a little bit higher rate. All we really need to do is make sure that affordability is there. If affordability is there for folks, they're going to jump in. It's our job, quite frankly, to not through fear, because that's a bad practice, but to educate folks on why waiting could be detrimental to them if they really want to buy a home. Because every time you wait, if you believe the forecasts that some of the best Wall Street firms have put out, it's about a 3 to 5% increase for the next 4 or 5 years. So you could say, I'm wait, and then great. If you want to wait 1 year, that's 3 to 5%. You want to wait 2 years, that's 6 to 10%.
Right.
So, by educating people, getting them in early, pre-qualify them early. Again, a shameless plug, but using, our buy now, sell later platform or a buy platform, or getting a renovation loan in place, getting the steps done first, because you have to be ready to strike, because if they're not making new land, it's hard to build. So if you're not ready to strike, you're going to lose.
Yeah.
That's why we focus our platform much more on product than we do on rates.
Yep. Especially if you wait. I mean, Jeff and I were just on a meeting, and Bright MLS ran a survey, and their data said that 75% of buyers that were searching, in their database have taken a backseat because the rates were too high. So if the rates come down and that 75% comes back off the bench, and you're potentially gonna try to wait. So I mean, that's a huge crowd.
It's a great time to buy right now. I've told all my buyers, like, this is a great time to buy if you're okay with moving in this in December, right? Inventory's popped a little bit, but I'm writing an offer today that it's actually gonna be a cash to keys offer. I'm writing today, and it's gonna be a multiple offer scenario on a house in Hunterdon County that but they'll probably have I'd say half dozen offers by tomorrow.
Yeah.
Mhm.
I'd say two quick things. One, again, another shameless plug, is we're the first company that I'm aware of in America that's now doing cash offers for FHA loans. No one's ever done that before, because FHA loans are at the bottom of the piles. You can ask, you guys know that if you get a conventional buyer or an FHA buyer, you're probably not going to accept the FHA buyer. That's just the way of the world. But having said that, Jeff, one of the things I hope doesn't happen, I hope rates don't drop too quickly, because there's not enough homes to get that demand.
Right.
And I don't want to go back to a world. Nobody here wants to go back to a world where, and it could definitively happen, where home prices are up 15 to 20% again, because it's going to make it very, very difficult. It's going to make it very difficult for everyone. So what I'm hoping is we sort of see this gradual. We go from, I'd ignore where we are right now, because it's a lot of uncertainty being priced into the market. What's good, it's bad. You hear all kinds of noise. Most people aren't even thinking logically; they're thinking politically, which is a problem, right? So once logic sort of filters through the system, we're going to get to a rate by January 30th, right? And then my hope is we sort of gradually go down, because a drop from 7 to 5.5 would be
It would be
problematic.
chaos. It would be chaos all over again. Yeah.
Oh man,
Yeah.
it would be nuts. It'd be crazy.
Now, Matt, we'll get to you now on the law end of things. I mean, we're dealing with a lot of different issues, with insurance right now. Is there
Yeah.
anything that you're seeing on your end from the legal aspect that you want to touch on?
Well, first of all, with regard to what you folks were just discussing, I'm always a week or two out from where you are, as I rely mostly on referrals from your clients. And I'll give you two observations that I've had in the last week and a half. One, there's a lot of excitement, as you're talking about. The buyers are very excited. The sellers, I'm getting calls from them, interestingly, from two different areas that I haven't gotten in a long time. One is, unfortunately, folks that are in a distress situation, that are considering either a short sale or just letting their home go up for foreclosure. What I usually do in those instances is refer them out to people like you, just so I can make sure that they see what their potential sales revenue would be. So if there's any a way to avoid a foreclosure or a short sale, I'm always going to see if one of the realtors out there can help them. And that's my first avenue. The second avenue on that, of course, is to guide them on the timing and what the process would be. But I do have a question after listening to you, Kevin and Joe. I know both of you have really good programs, generally speaking. Do you have any programs that I can send potential clients to you for distress situations? Do you have anything, if they are already in a home, where they might need some type of refinancing or restructuring that would help them avoid a foreclosure situation or even a short sale situation?
Yeah.
Yeah.
Sorry.
Go ahead, Joe. Sorry.
I say the answer is yes, but each one of those is very specific, because depending on how distressed, what's going on in the background. So we do a fair amount of that. But yes, of course, we're always willing to work with those folks and get them into a better situation.
Excellent. And back to the buyer's excitement level, I think you touched on the interest rates and how that is going to affect them, but the inventory is still there. And I have seen, and this is a layman's observation, I drive into County College a couple days a week from Long Valley, and I have been seeing more and more signs being put up every day, which of course is an indication that we have a switch going on that hasn't been realized yet. And hopefully that continues on. And I take over Chester Road, which is a nice straight run through multiple towns. You're seeing a lot more signage going up, which is nice, from all different companies.
Yep.
EXP, I see a number of their signs going up, which is great, but some other companies too. I am also going to point out a couple things that I've been getting phone calls on, which is how I gauge the market. A lot of people are calling about rentals recently. As far as the ownership of rentals, they're thinking of selling the rentals. I guess the fear is with the migrant situation and deportations, things like that, there may be a change in the way that the rentals have been. I think we all know how tight and expensive rentals have been over the last several years. Looks to me like there's a little uncertainty in the market on the ownership side, landlord side, as to whether or not they want to continue being landlords, and they're a little concerned about the potential changes that are coming there. That's to be, I guess we'll see how that works out. I don't think that's an imminent change, since most rentals are about a year or so. We may see some change in that. So for the potential investors out there, keep an eye on that. You may have some potential options coming up. And then on the selling side, there is a few new issues that those of you that are actively practicing out there, you probably already seen them. They're just starting to appear recently. One of the most interesting things that has come up recently is homeowners insurance problems. Roofs. Ever since the hurricanes down in Florida, a lot of these insurance companies have now taken a new position where they're going to gauge if they're going to insure you depending on the age of your roof and or some other conditions of homes. They don't just carte blanche insure anymore. They want an inspection. They ask for the age of the roof. Sometimes they ask for paperwork. And if there's less than 5 years life expectancy left, they're refusing to insure. And it started in a few companies. It's now expanded out to more companies. Uh, Companies that in the past have been very reliable on insuring questionable homes, which this isn't. It's just a new change. But companies that have been usually pretty open-minded about insurance are not open-minded on this anymore. I think we're reached a point now. This is a lot like the underground oil tanks that were decommissioned in place. If you recall those 20 years ago, that was a norm. You would be able to go to the town. You wanted to abandon an underground oil tank. The town gave you permits. You did everything you were supposed to. It closed out. The tank's in the ground. Fast forward 10 years. Now that's not acceptable anymore. Not because it's illegal. They're grandfathered. Not because they're not appropriate, but because perceptions have changed. Well, this is very similar to that. In today's world, if you find a client that has a home with an underground decommissioned oil tank, what the first thing you're going to try and get them to do is remove the tank and make it a marketable property. Well, now you're going to have discussions with your potential listings about the roof age and about the condition of the home, where this will become a problem. You cannot force someone to buy a home when you can't get homeowners insurance on it, because that's for those who are getting a mortgage, going to be a requirement of the mortgage company. And even if you're not getting a mortgage, who wants to buy a house where you can't get insurance unless you're willing to take a risk and are planning on rehabbing it, which is a rarity. So that's a new issue that's going to have to be discussed. 2 points, just like the underground oil tanks. Legally speaking, the homes are fine with older roofs. The problem is not legal. The problem is more marketing, and now slightly legal because of the inability to get insurance. So discussions will have to be had as the market opens up with the folks with the older roofs. It's going to annoy a lot of people. I've already experienced that with 2 deals where we're at the very end. Both of them were looking great. We got through inspections, we got through mortgage commitments, and the last minute we have this issue of the homeowners insurance refusing to give any type of insurance. It can kill a deal. So I would suggest that those of you watching this, keep that in mind, do a little investigation, make sure you have good insurance companies that you can relate to and discuss this with, and make sure you have this conversation with your potential listings.
Yeah. Matt, I'll jump in real quick. Just interestingly enough, that's ironically, we've been dealing with this same thing on the roof. And the two things that I'll share that are related there is that, one, we do recommend now that buyers do engage in insurance conversations right at the time that they're doing their mortgage disclosures, well before even they're doing their inspections, because a lot of times insurance companies will run their own searches and they have this data and they know the age of the roof already. One of the solutions that actually does exist for this is that some insurance companies will actually allow for the pledge of the buyer to replace the roof within a certain amount of time, and they will insure the house during that time frame. Maybe it's 30 or 60 days. If you think about normal insurance practices, they usually will bind the policy and they'll come out and inspect the house afterwards, right? And so in some few weeks afterwards. So they actually will go into an agreement in some cases where they'll say, if a buyer is saying, hey, I'm going to replace the roof anyway, they'll say, okay, well, if you do that, we're going to expect that to be done over, say, 30 days. And as long as you do that, we will give you the premium as if it were already done. We'll come out to make sure it was done right and move on from there. So I've had 2 people that have recently done that, but what that does, take is the buyer to be willing to do that, right? So to your point, those conversations happening a lot earlier in the process is definitely a best practice. And we've definitely taken that on the mortgage side of things as well.
And I would then, and that's great. I didn't know that you had that ability, and that's something that we're going to learn as we keep going forward with this issue. One thing, of course, this is going to come down to, we all got to keep in mind, is who's going to pay for the roof. So, a person who had a roof that had another 5-7 years worth of life on it, selling their home as is, right? Of course, we hear that all the time.
As is.
Learn real quick. As is doesn't always mean as is when you have complications.
Sure doesn't.
So remember, discussion and communication with your clients and your professionals are always important, as we just learned from Kevin.
Yeah. So I think the big question too is to express to the audience why this is happening. Jeff and I met with one of the insurance brokers, and he told us that during COVID, the insurance companies' rates were locked up. They weren't able to increase their rates. And obviously there was a lot of natural disasters. So on their books, there looks like they're losing a ton of money. So now they're trying to gain obviously money and also get rid of their risk as well. So they're not willing to take on the risk. They're looking for the properties in certain areas that aren't going to have the potential for natural disasters, and they're limiting their risk off their books so they can recoup what they weren't able to charge for the 2 years when they were locked up during COVID in rates. So, hopefully this starts to, as the insurance companies start to recoup some of their losses, because I'm sure they're struggling so much, insurance companies. Um,
Yeah.
but hopefully as they start to regroup some of their losses, that this starts to kind of lighten up a little bit. Because like you guys said, during home inspections and all this and the roof, that's great. But if you do close on a property and then all of a sudden the buyer gets a letter, a week after they close that, hey, we're not going to renew your policy because we did a drive-by or we looked at satellite imaging of your roof and it's too old. So now the homeowner's scrambling, trying to figure out what the heck they're going to do. Even though the roof might not be
Yeah.
leaking or anything like that. So it puts them in a precarious situation for
Yeah,
sure.
we have to attack it before it
Yeah.
gets there.
Well, also, if you don't,
Yeah. The data.
from my perspective,
Go ahead.
it's
Sorry,
again,
Matt.
I like the analogy of the underground oil tank, this decommission. Legally, there's no reason to remove it. It was more of a pragmatic business decision, and at some point, these are going to have to be discussions, on the roof, and who's going to be paying for a credit, who's going to be actually doing the work on these. If that is the norm that the insurance company is going to have now, it's going to probably be very similar to how we had to deal from a pragmatic way with the issues of underground oil tanks that are decommissioned. So it'll probably be the same methodology. We're going to have to wing it for a while and feel it out as the market keeps going.
Yeah.
No doubt.
Matt, are you seeing, because of the heat of the market, and are you seeing a higher probability of a buyer's remorse as soon as the deal starts going on? Or is it kind of like, hey, as soon as they're in the deal, pretty standard? Yes, there's some people that do want out, but majority are moving forward. What have you seen an increase in that?
I have seen a change. It started about a month and a half ago. Prior to that, most of the time people were happy to get a house. They would go through, accept a lot of defects that, perhaps from an objective level, you would wondered why they would accept it, but they were so happy to have the inventory available, they stayed in the deal. I don't know what changed, but about a month and a half ago, not every deal, but some of the more questionable homes that weren't perfect, a little older, perhaps a little dated. I've noticed that the buyers are becoming much more aggressive and willing to leave the deals quicker than they were 2 months ago, and that's been getting progressively more. Um, we're having to negotiate more as time is getting closer.
Yep.
So every deal is back like it was pre-COVID now. Not every deal. Most deals I've found we're back to pre-COVID times, where you do have to have discussions. You can't just say no and expect the buyers just to say okay anymore. Unless it's a very unusual house, which we still get. We get some of those multi-offer homes, multitudes of offers coming in. Those we have a little bit more flexibility, but I do still see some buyers pushing back and not caring if the deal falls through. And on the selling side, of course, hoping to have some backup offers if that does happen is nice to have. But I'm one of those that like to keep a deal together if it's possible. So the answer is yeah, I'm seeing a lot more pushback from the buyers lately, and they are becoming more aggressive and walking away from deals more than they have in several years, frankly.
I mean, I think that could be a big indicator in consumer confidence that, hey, the market is going to get better, inventory is going to increase, and the rates are coming down. So that's an interesting indicator right there.
Yep.
So, yeah, I mean, Kev, I mean, rates are rates. I mean, it's tough, but they are coming down. But like what Joe said earlier, it's like threading that needle to not, drop them so quick where the market just goes crazy, appreciation goes out of control, and we kind of build a market on a false narrative kind of situation. So
Yeah.
it's yeah, threading the needle, not an easy thing to predict whatsoever.
What I've been doing,
No.
guys, just for your, from my perspective as the lawyers, because of course you're the ones who put the deal together. You're the ones that are the folks that relay people to us. But we can make or break the deal once we get it. And as a real estate attorney, of course, my goal is always to protect the client, but at the same time, keep the deal together. I've been doing something very consistently over the last six months to 8 months, trying to remind both realtors that are with us and also our clients to go back to basics. We've all been so politicized. We've all been so concerned about inventory. We've forgotten about some of the basics of real estate. And having practiced now 25 years plus, as many of you have, when we go back to the basics, and that means communication with both the realtors and also, of course, the clients, but the realtors are imperative to have a good relationship with your clients. You don't just kick them out like some of the other attorneys do. You have to have it as a joint effort. Back to basics means communication. Back to basic means describing things in a non-emotional way, trying to keep the business side of things in mind, even though it's a home for the future for folks. You got to remind them, like I do, that the long end is more important than the short end. So the goal is to get a home. Your goal is not to worry about a few $100s here and there. Focus on what the ultimate goal is. Things like that are things that I'm seeing are keeping the deals together when they potentially could have fallen through. And I know the realtors that I work with have the same approach. They want this to be a joint effort. And more importantly, of course, the people behind the scenes, like Kevin. I mean, Kevin's instrumental. I have to tell you, our office has had multiple deals saved by Kevin and his company because they were willing to work outside the lines where other banks and institutions would not. Having the partnership level is key. And I think that's important for all of us to remember, both attorneys, realtors, and the professionals that are helping us in the background.
Yep.
Absolutely.
For sure. I mean, I look at clients when working with buyers, I almost have the mindset that the buyer has to convince me why they think they should buy this house. And the reason why we do that is to, be able to poke holes in it. Are you dealing with irrational thoughts, or are you actually dealing with reality of, like you said, Matt, the long term, and trying to prep them. So when it gets to Kevin and it gets to you in that transaction, these clients are bulletproof. They're ready to go. They have an understanding of the full scope of everything that's going on. So they have a higher probability to get to closing before they're too wrapped up emotionally and they're just pulling the trigger just to get an offer accepted, and a high probability of that falling apart.
Right.
So yeah, I agree with you that it is a group team effort in just managing emotions prior to really getting in the mix on certain transactions, for sure.
Managing emotions and expectations. Like you just have
Yeah.
to set the stage early.
Yep. I've had the nickname of Dream Crusher before, but I wear that badge proudly,
Yeah, I joke and say I'm half mortgage banker, half Dr. Phil sometimes, because it's the disappointments can mount. But to Matt's point, getting back to the basics, Joe said it before too. Having people prepared correctly up front so that they can strike fast. I oftentimes use the analogy, like, the real estate market is similar to a battlefield right now. And if we're walking out into a battlefield, you'd want the heaviest armor and weaponry they can, and having, the right team and understanding exactly what, the best numbers and what are going to work for you. I see the loan programs and the towns and the price range, the amount of taxes that the house should have, knowing all of those basics up front and being prepared. So, just kudos for both of those key words there together. Is instrumental to your success in this market. And, there's just no time better than now. Even if it's funny, and I think you'd all laugh and agree, right? You get people that say, I don't want to buy until next spring. We have a conversation today, and then by Monday morning, I have a contract on my desk, right? So you just never know. And there's a lack of inventory out there, there isn't just a plethora of perfect houses lying around. So being ready, whether the goal is to buy the beginning of the year or the end of the year, the opportunity can come fast. And, I couldn't agree with that more, just to have your ducks in a row.
Yep. I mean, proper preparation is the key to proper execution. So
for sure. Also,
Absolutely.
it's from a lawyer point of view, a lot of the dedicated real estate lawyers out there know this. You're the most important part of this. Sometimes if I'm having a difficult client, where I'm not really understanding where they're coming from, I reach out to my realtor to find out what the story is behind the scenes. I can't tell you how many times I've reached out to Jeff on a strange transaction that didn't make sense. I'm trying to keep the deal together, and I want to find out the background as to where our clients are coming from. Obviously, you're the one that had the relationship with them first. It's, from my perspective, a great tool to try and make sure that I'm reaching the goal of the client, as well as making sure I have all the information necessary. That's one of those back to basics that at least I think is important. And I think most of the other real estate attorneys in this area do the same thing.
For sure.
Absolutely. Communication's key. There's no doubt. Everybody has to, I say it all the time, like real estate, it's a team sport. And the team is everybody that's on this call today, plus other people that are working in the background. And you have to have that communication going. You have to keep everybody on the same page. And when that falls apart, that's when the deals die. So we gotta work all together on this stuff.
For
Indeed.
sure. For sure. Anything else you guys want to share?
I would say that, the one of the misconceptions out there, right, is that when the Fed lowers interest rates, that's not a direct correlation to mortgage rates. If you want to understand rates, really be aligned with your lender and understand what rates are for you and what programs you're using. I think that's a misconception that's out there. Also, seeing a little bit of a return of the seller credits, being, sort of in a conversation with realtors that now are more willing to kind of conversate about them as not a negative thing for a buyer, especially as it relates to, paying a buyer's agent's commission. It's kind of came right off the heels of the NAR settlement and how potentially a buyer could handle financing their buyer's commission that way. So, we're starting to see contracts come in with seller concessions added, which is good to see, because it kind of got shunned and put in a box of a real negative thing for the last few years, right? But now it's a vehicle that, can be very helpful for people. And I think the willingness and openness for all parties in the transaction to see it that way is starting to come back, which I think is a very optimistic thing for our industry.
Yeah. I mean,
sorry.
No, go ahead, Matt.
I like that idea. It's great information, and it made me actually think of something that I started to talk about earlier that I don't want to just let go at this point, because we're always, when you get right down to it, pragmatists. We're business people, and something that I have noticed starting more so than in the last probably 8 years, maybe 9 years. I mentioned it earlier, short sales. I am starting to get short sales in. I mean, those of you that know me long enough know that I used to dedicate myself to short sales, back when they were a thing. I haven't seen them in almost a decade. They've just been out the door. You could usually, with the equity, to sell the home, or, if it was too far gone or you had liens or judgments, you'd have to go through the foreclosure stage and sheriff stage. But right now I'm starting to see a new wave, and it's slow. But as the economy is great, on the one hand, for some people, it's not great. I think it was Joe had mentioned it. Maybe it was Kevin. We're starting to see people lose some jobs. Some of them can change those jobs and go to new jobs, but there are people that are in distress. I have been getting calls from people that are not talking to realtors first, that are going directly to people like me, and asking questions about their options.
Mm-hmm.
So again, when I do get those phone calls, the first thing I try to figure out is if there's a way we can get it sold conventionally. But if not, just keep an open mind to maybe having some market in the short sale department again, which is not the same as bank owned. A lot of people make that mistake.
Right.
It's not a bank owned. You've already gone through the process. The bank owns it. It's a pretty cut and dry transaction. You get what you agree on. Short sales are negotiated settlements. And if we start getting busy again with that, if you folks think it's helpful to the agents to do some seminars or discussions on the short sales, I think that'd be helpful for everybody, just to understand, some of the basics of them. And hopefully they don't become anywhere near what we used to have. But it is something I think is relevant to point out, because I'm getting more phone calls related to that.
So that's interesting. I mean, making an observation, obviously, it basically says that the majority of the public out there are just the margins are so tight for them. And one hiccup, there's a setback. And unfortunately, I've heard it and seen it so many times that say they are in a predicament, they don't reach out to somebody for help or ask questions until it's too late. And then because as soon as that short sale process starts and you're behind on your mortgage or anything like that, that clock is ticking. And we need
Yes.
to get an offer accepted to the bank to have the bank come out, run their appraisal and see what they're willing to accept the house for. Um, I've had people reach out to me because of, short sale situations, and I'm like, okay, where are you at? Have you received anything? Has Liz pendants been filed? Like, where are you? And they'll be like, hey, our sheriff sale is like in 2 days. And then you're like, there's nothing I can do.
Yeah.
I'm sorry.
Yeah.
I,
And there's also, you got to be careful, as hopefully down the road, we'll get into this more, but there are sometimes that a sheriff's sale is the only option because of reality. You have too much of an IRS lien. You have other judgments that have, medical bills, credit card bills that haven't been paid. They turn into judgments. The short sales will not allow those to be paid off. I mean, it just
right.
it can eat up the equity very quickly. And unfortunately, in the past, a lot of agents not knowing that, they put a contract together, equities there, everything's going well until a week before you're supposed to close, you get the big payoff from the bank, the approval, non-approval, and you find out that it's great without all the judgments. And if someone's not able to pay the judgments off, the short sale dies and everyone's wasted their time. So prep
Right.
is great. If we ever get back to a situation where those become a norm again, we'll be happy to talk about them and try to help out the agents as time goes on. But right now, just be aware that there are nuances to them. That's where I think I should leave it at this stage.
For sure, especially depending on when is the projected closing date? Because
Yeah.
you're doing the numbers, you're running the numbers at that particular moment when the offer comes in. But like
Yeah.
how many penalties are going to accrue over that period of time? And so when you get to that closing date, you're like, oh, there's an extra 20,000 in penalties. And it's a terrible situation. And we just wish that people, if they are you know, in that predicament, that they reach out to people as soon as possible to figure out what all their options are, because that clock is
Agreed.
ticking.
Absolutely.
Um, Anything else? Anybody wants to share? It's been a very productive conversation. Really appreciate you guys
Yeah, a
jumping
lot of
on.
great info today. This is awesome.
Always a pleasure.
Yeah.
All right.
All right. We'll wrap this up for Monday. So
Thank you, guys.
Yeah,
Message up.
thanks for joining us,
Awesome.
guys.
Thank you guys for the time today.
Yeah,
Absolutely.
we appreciate you guys joining us, and we'll do it again soon.
Sounds good.
awesome,
Good
guys.
luck to everybody.
All right, take care, everyone.
Thank you.